Good morning, friends. Welcome to SBI Securities Morning Podcast. In today's podcast, we'll be discussing what to expect in Nifty and Bank Nifty from here on, as well as the key levels for both the indices. We'll also be discussing on the main sectors in focus in trade today, as well as the next few trading sessions. First up, coming to the update in the global markets in trade yesterday. So in yesterday's trading session, if we see the US indices ended on a mixed note. We have the Nasdaq which managed to surge by nearly 1%, while the S&P 500 gained 0.45%. In contrast, the Dow slipped into the red, finishing 0.23% lower at levels of 40,736. Going ahead, the S&P 500, if we see the zone of 5,530 will act as the immediate hurdle, as the 20-day and 13-day EMA is placed in that zone. Any sustainable move above 5,530 will lead to a sharp upside rally towards the levels of 5,600 in the short term. Coming to Brent oil, so if we see Brent oil experienced a sharp sell-off, plunging over 3% and closing below the 70 mark for the first time since December 2021. We believe it is likely to continue its southward journey and test the levels of 67 in the short term. The dollar index in trade yesterday failed to sustain above the 20-day EMA level and ended on a flat note. Going ahead, any sustainable move below the levels of 101.30 will lead to resume its downward journey. Coming to the update regarding our markets. So if you see in trade yesterday, the benchmark index Nifty traded in a 233 point range and ended about 25,000 mark with a gain of 0.42%. If we see on the daily scale, it has formed a high wave like candle which suggests uncertainty among the market participants. Going ahead, the zone of 25,140 will act as the immediate hurdle for the index. Any sustainable move above the levels of 25,140 will lead to a sharp upside rally towards 25,250 followed by 25,330 levels. On the downside, if we see the zone of 24,950 will act as the immediate support for the index. If the index slips below the level of 24,950, the next support is placed at 24,860 levels. Coming to the constituents, how they performed in trade yesterday. So if you see 18 stocks of Nifty witnessed long built up, 17 stocks witnessed short covering rally, 9 stocks have witnessed short built up and 6 stocks witnessed long unwinding. If we look at the option chain data, that is for tomorrow's expiry, 25,100 has witnessed significant call open interest followed by 25,200, and on the put side 25,000 has substantial open interest followed by 24,900 strike. For the weekly series, if we see the put call ratio is at 0.79, while for the monthly series the PCR is at 1.54. Now coming to the update regarding Bank Nifty. So in trade on Tuesday, Bank Nifty marked a low of 50,958 and thereafter witnessed a minor upside rally. It has ended above 51,250 mark with a gain of 0.3%. If we see on the daily scale, it has formed a small body bearish candle with long lower shadow. Going ahead, the zone of 51,500 will act as the immediate hurdle for the index. Any sustainable move above the levels of 51,500 will lead to a rally towards 51,900 followed by 52,300. On the downside, if we see the zone of 50,900 will act as the immediate support for the index. If the index slips below the mark of 50,900, the next support is placed closer towards 50,500 levels. Do note all the levels that we mentioned in the support resistance are on the spot basis. Coming to the key market indicators, so if we see in trade yesterday for the second consecutive trading session, the volatility index India VIX was lower by 6%. In the last two trading sessions, it has tumbled by over 12%. This signals a noticeable decrease in the overall market volatility in comparison to last week. Coming to the advanced decline ratio, so the advanced decline ratio tilted largely in favor of the advancing counters in trade yesterday. Coming to the key sectors in focus, so technically Nifty IT, Nifty Pharma, Nifty Healthcare, Nifty FMCG and Nifty Consumer Durable are likely to outperform in the short term, while on the flip side Nifty PSU Bank, Nifty Oil and Gas, Nifty PSC are likely to underperform in the short term. Coming to the FII-DI data, FIIs bought to the tune of 2,208 crores while DIs sold to the tune of 275 crores. That's a wrap of today's edition of the podcast. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.